This is easily the most misunderstood equation in real estate, and I'm going to teach it to you. Now, it has nothing to do with sales and has everything to do with your income. This one actually hits really close to home for me because I have been a real estate agent, my professional career, a team leader, a brokerage owner. I've had the opportunity to coach, train, mentor, and work with literally thousands of real estate agents. To be honest with you, I love real estate agents. I think that there is no other business where the baseline is just people that are entrepreneurial at heart. They want more in life, and they're willing to slug it out and try to go for it. I love that culture. I love the community. And the reason why this is so important to me is because most agents get into the business because they want financial freedom. They want to create passive investments, primarily real estate. They want to make more money. They want to live a higher quality life. And they don't want the restraints that they might feel or know about within a 9-to-5 job, right? The reality is that, and this is the tough part, is that maybe only 10%, and that might be rounding up, 10% actually get that. And the reason they don't get it is because they don't understand this equation. And this equation is so important because if you ask, which I do this every week, real estate agents, what they took home last month, right? Not what you made in gross commissions, not how many sales you had, but what did you actually net profit into your bank account as earned income? They usually don't know. What was your net income for last year? Your actual net, not your revenue, not how many homes you sold, not the percentage based off the sales price times 10, right? Like, what did you actually net profit? And most agents, 90%, don't know. And that's okay, but it's not going to get you to that other point in real estate where you're making financial investments, you're buying real estate, you're growing your business in a smart way that makes sense. Okay, so here's what we're going to go over. We're going to go over this equation, and you need to take notes. I also have a cheat sheet for you. If you need it, just put it in the comments. I'll get you the notes on it. But your notes are going to be more valuable than mine, but I do have that. Now again, if you get value out of this, which this is not even a question, I know you will, please share the video, comment, subscribe, you know the drill. This is going to be good. So we're going to break down what this actually is. Now, we all know, I'm seeing a background, back it up real fast. If you want to buy real estate, you want to go through a bank, right? A bank's going to want you to have W-2 income, right? They're going to want to see some income from you. They're going to want to see some P&L, some type of bank statements that show what you're actually profiting. A lot of agents don't have that. Most agents don't have themselves on salary. This is how you set all that up so you can create 2 years of solid employment from your real estate company. You're going to improve your credit, show what your net profit is, actually save up the down payment you need, and you're going to be in a position, and that's the key word, a position to buy real estate, okay? So revenue. What is revenue? Revenue is going to be the math you do on your calculator, okay? The $500,000 sales price, and I am charging a 3% commission, okay? That is going to be what your total revenue is. So we're just going to use $10,000 because it's an easy number, okay? So let's just say your revenue on your sale is $10,000. This is the total commission from the deal, okay? Now, that's pretty easy to understand. That's just total commission on what you're charging. It's usually on the settlement statement. That's the revenue. Now, cost of goods sold, very misunderstood concept. Your cost of goods sold is going to be any cost directly related to that transaction, okay? So let's think about a couple of those. Photography, floor plans, if you pay for someone to put up and take down your signs, transaction management fees, maybe you contributed a home warranty, right? You credit them for a home warranty, your clients. But the biggest one is going to be your split. Your split is the cost of goods sold because your split is only charged when you do a transaction. Hence, it is a transactional cost of goods sold. So the biggest one you want to factor in is your split, okay? And then that'll be plus any of your transactional costs that I went over that list, okay? Now, most of your transaction management softwares with your real estate companies are going to factor the split already, right? You're going to get your statement. It's going to have your split. It's going to show all the little transaction fees from the brokerage, and then it's going to show what you actually netted out from it, okay? You got to take that number and then you got to subtract those things we talked about: floor plans, photography, someone who you paid $50, someone to put up your sign. You contributed a home warranty, $500. You had a transaction manager, $500. You're going to want to add those in addition to the split. And that's going to give you your total cost of goods sold. So once you take your revenue, you subtract your cost of goods sold, now you have gross profit, okay? So now gross profit is not the actual net profit, it's the gross profit. It's the profit before the profit, okay? So cost of goods sold, obviously we want to minimize this as much as possible, right? Now gross profit is going to be a number, and we're going to take that number, and let's just say, for the sake of the argument, let's just say you have, $8,000 is your gross profit, meaning that your cost of goods sold was $2,000, okay? So remember, revenue, cost of goods sold was $2,000, gross profit $8,000. Now we're going to subtract our expenses. Now, what are expenses? Expenses are anything that you spend on in your business that are not directly tied to a transaction. So let's just say you have a desk rental fee, right? Maybe you have an office. Let's just say you pay additional money for your CRM. Let's just say you pay for some type of lead generation. You have a virtual assistant. You have you bought a ton of open house signs for the year, right? These are all expenses. In accounting, they call it G&A, general and administrative, but it's really easy just to understand it as expenses that are not directly related to a transaction, okay? So let's just say that your monthly expenses for your business are $2,000, okay? Just hypothetically, $2,000, okay? That means that your revenue is $10,000, your cost of goods sold, right, is $2,000, your gross profit's $8,000, your fixed expenses monthly are $2,000. You are going to have a net profit of $6,000. And frankly, it would also be at 60% margin. That's a really good margin for your real estate business, okay? So gross profit is going to be the number after the expenses. Now you have your net profit. So let's just say this is what you did in a month, right? Your monthly expenses were $2,000. Your cost of goods sold and your split combined was $2,000. You brought in $10,000. Your net profit for this month is $6,000. So now you know, this is what I made last month. I made $6K. Not bad, okay? Now I want to show you something, and this is going to help you conceptualize splits, and I call this true split, okay? This is a really cool concept, and what it's going to help you do is it's going to help you evaluate your brokerage decisions, your team decisions, because now that you actually know what things cost you, you can weigh pros and cons for what brokerage and teams provide. So I'll give you a quick example at something that happened to me just the other day, and we will see the differences between what people think they're making, what their split is, versus what it actually is. So I had an agent, I run a sales team, we have a 50-50 split straight up. That's our model, okay? Now, we also cover everything under the sun, minus your licensing fees and like the gas for your car and your own cell phone. We pay for everything else. So the agent on our team has almost zero out-of-pocket expenses. So I had an agent I was interviewing, and he said, whoa, 50%, nope, I'm done, I would never do that. Oh, okay, cool. Well, before we talk about anything else, let's just talk about that for a sec. What did you pull in last year in terms of revenue, okay? The agent told me he pulled in $100,000 of revenue. I'm like, okay, cool. What's your split? He was on an 80-20 split, right? So 80% split, 80-20, and now he has 80,000 left over, okay? So then I asked him, well, okay, so more or less, what did you spend last month? Like, what do you spend monthly for your business? And I gave him the rundown, right? Signage, transaction fees, lead generation, CRMs, postcards, you guys know all the stuff, right? Photography for your listings, all that good stuff. He said, oh, I only spend $2,000 a month. Like, no, okay. $2,000 a month, okay? So 2,000 times 12 is 24K, okay? So I am a sales guy, not a math guy, so I'm gonna make sure I do this right for you. $80,000 minus 24,000 is 56,000. So this is his net profit is $56,000. Well, correct me if I'm wrong, if he was on my team, he would have 100K, 50% split, right? And he would net 50,000. Okay? So really the difference here is 6%. So while this agent thinks he's at an 80-20 split, he's actually at a 56% split, or a 44% split, if you will, right? Every dollar he makes, he only sees 56 cents of it. So my question for him was, hey, working together, do you think that I could help you make more than $6,000, right? So the reason why this is important is not because I'm trying to convince you to join a team. The reason this is important is because now, once you understand what your true split is and what you're currently paying for, you can weigh it against what a brokerage or a team is paying for, and you can actually determine, is this going to be more profitable for me or not? And I think that's the question that we all are wondering, especially with brokerages and teams. And so the best way to think about it is conceptualize it. I love framework. If I take my resources, combine them with the brokerage or team resources, put them together, do I create a bigger opportunity for me and faster? So the same question I asked this agent is, if you combine your resources and my resources, we put them together, do we create a bigger opportunity and faster? And can we help you make more than an extra $6,000 next year? If the answer is yes, then that means that, well, we're already winning, right? We're already ahead of where you were last year. So that is the true split. Now, I have a course that actually teaches all of this in way more depth. The accounting side, how to become more profitable in your business, how to lower your expenses, and how to ultimately increase that monthly income so you can start buying real estate properties. So if you want that course or you want access to it, just drop a comment below and we'll make sure and get it to you. I think you'll really like it. It's something that I'm super passionate about because I've been there. I've been a team leader, brokerage owner, individual agent. Nobody ever formally taught the financial aspect of the business so I could actually become a smarter business owner that's in a better position to continue to acquire real estate, to get that financial freedom and to get that passive income. So again, if you got value out of this, you thought this was interesting, if you have any comments, need me to clarify anything, just make sure and drop it in the comments, share it with a friend, like, subscribe, you know the drill.